Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello trading friends, checking in on the markets in the S&P 500. So a couple things to note today that stood out. A couple points in favor of the bulls who have not had many points in their column over the last couple of weeks. So what stood out, number one, we broke the low of yesterday and saw no bear follow through. We broke it by 29 cents. And after that level held, we saw some significant dip buying, which showed me the first time I've seen some notable confidence. And I'm not talking about a short squeeze, end of the day, hour-long bull move confidence. I'm talking about significant moves off the low of the day. Netflix from the low of the day, V-shaped recovery, 10%. Amazon V-shaped recovery, Roku, just a whole bunch of names where it was almost like once that double bottom hit, bulls started putting money to work. That being said, we did not change the hourly trend for the bulls. Looking at SPY, we had the low of the day, high of the bounce. This was a very easy top fish resistance play. The high was 256.90. We topped out at 256.17, and we were watching how extended we were heading into that resistance level while Trump was talking on TV. It was a very clear top fish because of that extension. So entered bearish. In the past 2 days, I've made 2 bearish entries, and that's pretty much been all I needed to do for the day in terms of making a bear entry and then just letting the bears do their thing and drive the price back down. So if at that point, the top fish is just entering. As soon as 256 broke, I made an entry. My goal is to have my risk less than $1 on SPY. So whether I'm playing off support or playing off resistance, as soon as that level broke, I knew my risk was less than $1. Would have stopped out if 257 broke. And fortunately, we very convincingly pulled back right after that, sold half to then have complete control of the trade quickly, and then just rode out that other half until this bounce started playing out into the afternoon. So now we ended the day with a half-hour time frame in an equilibrium, and we don't have any clarity whatsoever. Low of the day, double top with the high of the day, so double bottom, double top, higher low, lower high, higher low, lower high, tight range. Futures traders might determine how we're going to break into tomorrow. Pretty much a double bottom and a double top the past 2 days. If we get a bull break, we look to 271.48 as the next resistance level. And if we get a bear break, we're back to free fall. Another point in favor of the bulls is oil dropped to a lower low. I've been highlighting how that is key for me to be watching. Oil broke 27.40. The only support level left is 26.08 from a long time ago. That was from 4 years ago. If 26.08 breaks, oil is back to free fall. Why this is a bullish point is we were very cautious saying, okay, if we get a bear break, it might drag the market down. But look at what oil did today over the last few hours, and SPY did the opposite. SPY held strength. So that tells us that SPY is in a bullish correlation with oil, meaning it's holding up just fine on oil weakness, and on any oil oversold bounces, the S&P 500 is going to be positioned well to benefit from that. So if we were to see an hourly oversold bounce from here, I would then be watching to see, can the S&P 500 bulls use that bullish correlation to their advantage to help themselves out a little bit? And we see this many times where two things will be tracking each other, and then that correlation will break in one direction, and we have a favorable correlation in the other direction, and then we start to see it benefit. Again, the example I give is if I'm tracking something one step forward and one step back, and then it changes. So where if the bears take 2 steps backwards, this only takes 1 step backwards, and for every step forwards it takes a step forward. So that would be essentially taking half the downside while taking step for step on the way up. That's the kind of correlation that the S&P 500 and oil are currently in, and the fact that SPY is not in free fall while oil broke that support is a point in favor of the bulls category. And I'm just imagining a virtual piece of paper where I'm tallying points for bulls and bears. Bears have the majority of the tallies. We're in a daily, weekly, hourly downtrend. We have not changed the hourly trend. which is step number 1 for any kind of bounce to take place. So if 256s do not break tomorrow, bears keep complete control. IWM is trying to bounce as well. High of yesterday, 111.30. High of today, 110.50. Unable to break resistance, unable to change the hourly trend. Low of the day, high of the day, higher low. Could not see a new high of the day into the close, which is what the bulls needed to do to have some convincing momentum in their favor. So, same setup as SPY, have to break the high of the last 2 days tomorrow to get any bounce follow through. QQQ is the same. It's an inside bar, held the low of yesterday, failed to break the high of yesterday. Have to see those two resistances break for an hourly trend change to be confirmed. If we break it, we zoom out and look at the next key resistance of 194.48. Financial sector, daily inside bar. If it breaks bullish, 2309 key resistance. If it breaks bearish, we're right back to the low. XLV did break the high of yesterday without a whole lot of convincing follow through, but it's more bullish than the names that did not. So technically, we did change the hourly trend. Bulls just ideally would have seen, and you know what? I take that back. We didn't. Low of the day? Well, you could say we did with yesterday's levels. So yesterday, low of the day, high of the bounce, higher low, and we did break the high of yesterday. So at this point, it's an hourly trend change with a lack of follow through, and we should get some notable follow through if the S&P 500 can break bullish. So this is a scenario where XLV has a bullish correlation to SPY. Why? Because it broke its high of the day when SPY did not, and we know if SPY breaks its high of the day tomorrow, XLV will continue to get follow through that resistance level. Biotech sector, XBI, lower high and lower low, still weaker. Hourly time frame did not change the trend. We got the low of the day, high of the day, higher low, no hourly trend change. SMH, same thing. High of the day was up at 111.06, and actually we did break it by a few pennies at the end of the day, but resistance right here behind it, 112.44. So it is an hourly trend change, but we only broke resistance by 30 some cents. Not convincing in any way, but a little bit more favorable than the names that did not. TLT, daily lower high, very quickly set. And if we break this 152.19 support just like that, we're in a daily downtrend. That would be a lower high and lower low. And from there, we'd zoom out and look for weekly consolidation. And we would look for a weekly higher low compared to 141.90. But bears in complete control. 1 day bounce, not doing much at all. Close at the low of the day, pretty much 4 out of the last 6 days. And it's all about 152.19 support in the short term. If that breaks, we look to the low 140s. The VIX, still holding on. I'm watching the 4-hour time frame. We've been in a clear 4-hour uptrend at this point for about 2 weeks. So losing that would be a clear shift in momentum for me. We have a new high. Support is trying to form here at 1740. If we fail to break the high and lose 1740, that is a clear shift in momentum away from the volatility bulls that have had control over the last couple of weeks. So 4-hour time frame for clarity on the VIX, and I would expect we're going to start seeing some weakness if the S&P 500 bulls can break that 256 double top. The dollar is in full control for the bulls, showing us it's the life raft right now. Everybody's hoarding their cash. Speaking of which, hearing more and more word of banks running out of cash. New York is out of $100 bills, I heard from a friend. Had a friend go and try and take out some significant capital. Normally they'll tell you to come back in a few days and get it. They said, come back in a few days and get it. Oh wait, never mind, our delivery is delayed. It's going to be a few weeks. So not a ton of cash in the banks right now. 99.91 is resistance. But virtual cash holding on just fine. And that's where the majority of my money is currently sitting. So a little double top at 99.91, but bulls still holding on just fine. We would have to lose the 4-hour uptrend without breaking that resistance to be looking at a rejection. Otherwise, we're watching that key resistance level tomorrow. Dollar with a V-shaped recovery. Gold started to bounce, which is a good sign for the gold bulls, considering the dollar had a big bullish day. Gold changed the 4-hour trend with a higher low and higher high. The daily candle is still an inside bar, though. So we have to break 1554 tomorrow for an inside bar bull break. And if we get that, we would then look for a lower high compared to 1703 and a tightening range. Bulls want to see as much bounce as possible to create as much space as possible for a daily trend change attempt. But on the initial bounce, We are just looking for a lower high compared to 1703. Silver did not change the 4-hour trend. A lot of people have been commenting on videos and talking about silver and, oh, the ratio is so low, now's the time to buy silver. Right now, the gold to silver ratio is pretty much in blue sky breakout mode. So fighting all of that momentum is not a good idea in my opinion. There is no harm in waiting for trends to be our guides, whether that's a loss of the daily uptrend of XAU, XAG, which again is just absolutely exploding. And even when we consolidate, we're just going to look for a daily high or low, with gold keeping its strength comparative to silver for the foreseeable short-term future at the least. So silver could not break its 4-hour trend while gold did. And the daily time frame is a weaker inside bar. If it breaks bullish, we will look for a same daily lower high, but it's weaker. It has a bearish correlation comparative to gold. Bull miners, beautiful follow through. Another big day for those bull miners. At this point, we bounced almost 200% in 2 days from the low, which is insanity. A point that I need to drive home in this video, and write this one down. Leveraged ETFs were not designed to perform in these current market conditions. So whether you're looking at drip and gush, whether you're looking at NUGT and dust, or JNUG and JDST, or UWT, whatever it is, they are not tracking the underlying assets the way they should be, because these market conditions and this amount of volatility is not normal. So just be extremely cautious trading those names. We used to watch time decay and volatility decay on those leveraged ETFs, and we'd have to look back a couple weeks and say, okay, I can see, yeah, it's a little bit lower. Now we can do it in 1 day's time, and we can see how much weaker we are. Let's do it here real quick. GDX, from the high of 30 to the dump low of 16, the midway point is $23. And we have passed that easily. We are we're 8% over the midway point of $23. And we look at NUGT, which is supposed to be tracking this as a 3 times leveraged ETF. And right now, the midway point of this dump and bounce would be about $19. We're not even close. We would need to see a 30% move, a 35% move in NUGT tomorrow to even catch up to where GDX is currently trading on its chart. So just keep that in mind. They are not performing the way they should. It is a wacky market environment. Hourly uptrend is our guide. Hourly high or low for NUGT is 1152. Tons of volatility. When we lose the hourly uptrend, our daily lower high will be set. Bears are waiting to short NUGT on that lower high. So keeping an eye on how gold breaks its daily inside bar, keeping an eye on the hourly uptrend for when to be looking in the other direction, back away from the bull miners. Oil, so only support is $26. Any bounce, we're just looking at an hourly lower high. Anything under 30.20 or 30.30 is a 4-hour lower high. Anything on the daily under 33.98 is a daily lower high. Bears have control of all time frames, and oil is all about $26 support. Natural gas 12-hour equilibrium tightening range broke bearish. Just another example of natural gas bulls getting no follow through. We did not change the daily trend with a higher low and higher high. We have a lower high and lower low, and 161 is back to the only support. The amount of bull fakeouts that this name has given in the last 2 years is insane. And as a New Year's resolution, I put out my trader's New Year's resolution. I am never trading natural gas bullish again, at least in the foreseeable future, at least in 2020, because of the amount of fakeouts and because of the fact that there are way better trading instruments out there, in my opinion. You look at this chart and you say, oh, we're due for a bounce, but man, if these bulls just can't do anything. So we're looking back to the low. So I hope you had a good day out there. I've been keeping it cash overnight for the most part. Very small SPY long-term swing position at this point. I would add to it if we drop down to 220 or lower. Otherwise, I'm just sitting comfortably. And so far, my 2 best trades the last 2 days are bearish entries on hourly lower highs. We'll see what tomorrow brings. Double top, double bottom. Have a good rest of your day. Do good things. Planted a bunch of bulbs that are all coming up. Although someone's digging. Jerks.